Preliminary calculations have shown that GDP growth could exceed 5%, resulting in a strong positive knock-on effect on household consumption and government investment spending. In terms of the sectoral outlook, Motinga said agriculture and meat processing are likely to contract this year following the extensive drought in 2013.
Farmers don't market anymore because there is a process of stock accumulation that has to take place. So we foresee a significant decline in the number of livestock to be marketed, and therefore, since Midco is one of the bigger recipients of livestock market, particularly cattle, we expect to see a decline. So for meat processing, we see 12% decline in GDP growth, and for agriculture proper, a 20% decline in GDP growth.
He further said domestic indicators remain at healthy levels, adding that new vehicle sales grew by 60% year-on-year in January, which was the highest it has been in annualized terms since March 2008. Meanwhile, private sector credit demand stayed at 15% on average for 2013 compared to 14.6% in 2012. Strong upside potential in credit demand can still be observed, bearing a significant change in interest rates over the next few months, and it is expected that private sector investment will accelerate. Motinga also focused on the fiscal policy, saying that the government was budgeting for a significant increase in spending for the next medium-term expenditure framework, MTEF, starting during the 2014-2015 financial year. During its budget presentation, the Ministry of Finance announced that spending would increase from 47.6 billion to 60.3 billion.
As we have been on record as saying, we foresee, in fact, there's a major ramp up in spending. Of the increase of 13 billion that is coming through, 10 billion is going to civil servant working conditions, the salary improvements, medical aid and the like. And typically people spend those salaries. So we see a positive knock-on effect because of the additional spending that we foresee at the back of these salary hikes.
With regard to inflation, Motinga advised that inflation for January 2014 came in at 4.9% year-on-year, the same as the previous month, while goods inflation continued to show strong growth since the revision of the CPI basket last year.